So as you know, the Fed raised the overnight rate by 0.25%. Unfortunately, we saw that fixed income returns actually went negative, unlike the last quarter of 2017. Can you explain why that was? Why did we see bond prices fall this quarter?
Yeah, exactly. So the Fed raised rates last quarter, and they raised rates this quarter the same amount. Totally different results. Last quarter, bonds actually were up 1.5%, even though interest rates were raised 25 basis points. This quarter, bonds were down 1.5% with the same rate hike. What happened this quarter was, unlike last quarter, when the Fed raised rates, all interest rates went up. Last quarter, short-term rates went up, long-term rates actually went down a little bit. So if you look at the 10-year Treasury, last quarter it was flat. If you look at it this quarter, 34 basis points higher. And when interest rates go up, bond prices go down. So this is really the first time I think that the market said, okay, the Fed raised rates, and it impacted the long end of the curve, the longer dated securities, because the reason the Fed raised rates and the talk was inflation was picking up. And that really impacts all bonds, not short-term duration bonds. So really a switch in the way people kind of looked at the overall market. And I think we factored in at least one more rate hike in 2018 that wasn't factored in earlier. And that's, again, helped push rates higher. So the 10-year, the 30-year, the 5-year, they all went up, where last quarter anything past about 8 years in duration was flat, and yields did not move higher, and bond prices didn't move lower. So the curve shifted in a different way, and it impacted returns in a negative way. So that's more normal what happened this quarter than last quarter. Last quarter was a bit of a surprise, but nonetheless, I think investors are factoring in 3+ rate hikes this quarter, and now that's happened in a short period of time. And we saw the 10-year again go up 34 basis points, which you can imagine if that happened every quarter, we'd be looking at almost 1% a quarter, which would be a very, very large move. So I don't expect that to continue, but it was a big move in the first quarter.